Hello, welcome to the Bullish Money YouTube channel. I first want to give a shout out to all the new subscribers out there that have joined in primarily because of the interview that I did with crushthestreet.com. I hope you'll find this channel useful as well as entertaining. Now, for all of you silver investors out there, I wanted to do a video about the silver market and compare it to the S&P 500 index. And I wanted to do this in a way to bring a sort of a fresh perspective. I wanted to strip away some of the noise that is inherent when we use convoluted financial language. And I wanted to look at these markets from more of a pure scientific perspective. Now let's pull up a chart of the silver bullion spot price. Now, between the years 2000 and 2016, the displacement of the silver price, or the total net movement of silver, is roughly $10.75. When you break that down in terms of average velocity, silver has an average velocity of 67 cents per year. This net displacement is broken down into a series of smaller areas of displacement. You see over here, two areas of displacement that are in the positive direction, and then one area of displacement that is clearly in the negative. Now let's take a look at the S&P 500 index. I have here still the silver spot price in blue, and I have the S&P 500 in light orange. Now the displacement of the S&P 500 index between the years 2000 until now is roughly 892 points. The S&P 500 index has an average velocity of 56 points per year. But the main difference between the S&P 500 and that of the silver market is when you look at the individual areas of displacement, you'll notice that despite all the intraday movements, when you look at it, when you break it down with through an annual average perspective, you'll notice that the S&P 500 is primarily a bullish market. There are no individual areas of negative displacement. All the areas of individual displacement are positive. And even more startling is that since 2010 until now, the average displacement is extremely positive. Whereas when you look at the silver market from 2010 until now, the displacement is obviously negative. So when you look at the broader markets, the S&P 500 index, you'll notice that the trend is has a relatively flat trajectory. That's because there's only one direction. It's just primarily a positive bullish market. Whereas with the silver market, you see variance. You see a period where the silver price was moving very high, and then you have a period where the silver price is being distributed, or it is volatile. It is changing direction. It is changing its trajectory. These are healthy markets. Whenever you're looking at financial markets, of course, you want to have a series of bullish cycles as well as bearish cycles. And this is, buy and sell, give and take. You want to have that. A characteristic of a free market, a truly free market, has cycles that are bullish and bearish. I mean, this is just the balance of life, if you want to look at it that way. Whereas in the S&P 500, this is more characteristic of an artificially induced market. In fact, as the years go by, the displacement becomes even more and more positive, which is crazy because let's just consider the fundamentals. The fundamentals are so bearish across the world. And right now, the big issue is China. China has expanded exponentially their credit market, but they're not gaining in terms of economic productivity. We just saw Chinese export value data that was released over the weekend, and Reuters labeled that data, labeled that report as grim, because the the value of exports as well as the value of imports in China was dramatically below consensus forecast. That suggests that there's a weakening, a severe weakening in Chinese economic activity, as well because of the decline in import value. There's also weakening among the Chinese consumption rate, among the Chinese consumer sentiment. So on both fronts, China, as the king of the emerging markets, has dramatically weakened. That right there should be enough to force investors to pause and to say, wait, what's going on here? How come the S&P 500 is so dramatically levered into the positive direction? In fact, as you can see in this chart, the displacement, the individual areas of displacement continue to get more and more and more positive, despite the fact that the fundamentals appear more and more bearish. My friends, I think this is setting up for a very bad scenario for those that are purely, wholly levered to the equity markets.